Hey, it's Mike with PriceActionTradingSystem.com, and it is Monday. It's November 14th. This will be our chart lesson for the day. And it looked like we were going to have a range day. We started out in this range, two-tiered range, and late in the afternoon we had this, it's a spike and channel down, really. We bounced here at the lows, but they worked their way on through, and we continued in this two-tiered green channel. And you can see the other smaller patterns within that. There was a lot of sideways stuff here all the way down. And of course, from the original range up here, there's two tiers in it, but just measure that full range. And you can see that, and then just drop that down. And look for a measured move from there down. And you can see that's about where we ended up. We actually pushed a little further down, but that's where we bounced, right in that area. Kind of tested that on each side before we pushed lower, and right at the close we were right back there again. So the other way I would look for a target on the way down is I'd measure this first leg, and then where we started down was from here, and that gives you this target right here. We pretty much hit that to a tick before we went sideways. It looks like we might have missed it by a tick or so there. Not by much, and I may not quite have it at the top here. Yeah, it looks like we missed it by a tick or two, but that's really close. That's close enough for me. But for the most part, this was a downtrend day, although we started out, I mean, this has been pretty typical. I mean, there was really no surprise at all that we traded lower today. And the reason I say that is because, let me get this straight here. The reason I say that is because notice this is where we opened here today, right here at the regular session where it turns white. So even with the overnight stuff, there's still a gap on the daily chart right there where there's no price action. But generally you could close this off and just pretend we closed here and opened here on the daily chart, and they'll usually try to fill those gaps. So my first target was right here, and then a secondary target where these closes. And then of course your other targets would be based on the measured moves. And so I could tell you with a lot of confidence that early this morning that we were probably going to trade down to these price levels. And if you go back and look at the mid-morning chart, you'll see where I posted those. And people ask me, well, how'd you know that? Well, that's how I know, because I know these gaps are filled pretty quickly. And if we attempt to fill this gap, that's going to be your first target, was this high from Friday. And I think it's that actually the high from Friday is over here, but this was in the overnight, and I would be looking at the daily chart, which is going to be these highs right in here and right in here. And you can see that's where we really found a lot of support right there. But we continue to push on down, and then you'd use your other targets for that. So just keep that in mind. That's how you know early in the morning that there's a good chance we're going to turn down. And it took prices a lot of work to get through these levels each time, but they just kept dropping down. And we've seen a lot of that lately, so that's not uncommon. But I'm not going to beat around the bush. We've got a few trades to talk about, and the last couple of lessons have been a little longer than I'd like. So you did have to be patient this morning. But anyway, I'm going to back out. We'll go through the trades, and we'll wrap today up. But 7 o'clock came right as we're topping out here. But notice you're in this range and you break out. Well, what usually happens on a breakout, it fails, and prices are going to come back at the very minimum and test the breakout area. And that's exactly what happened. We came back, tested that, and then went higher from there. So once we started going higher, measure that first leg and look for a measured leg. And we didn't quite get that this morning, or this morning. So we didn't miss it by much. That's close enough that I'd call that a target. But the fact that we didn't quite get there tells me we're probably going to go a little further in the reversal area. And once we started trading down, obviously you want to respect these lows, but you just about almost know where we're headed. We're headed down here to fill the gap. It's like clockwork. So always be aware of that. But anyway, you get this failed breakout here. So we're just looking for a chance to get short. Generally, you want to weigh on a lower high. I didn't do that here because notice you got this channel working up. You get a close outside, a new high, and then you push just slightly higher and failed. And even though that looks like a doji, it's more bearish than it is bullish. And that is also a second entry short. Notice you got a new swing low. It's lower than that one. So you're moving up first entry and then second entry. So you got a second entry short, a close and a new high, and you got a little bit of a trap. You made that high and you just pushed a ticker so higher and then turned down real quickly. Look how far away we are from the EMA. You're probably coming back. I like that trade. Again, generally you're better off to wait on a lower high, but in this case, being that far away from the EMA for that long, since around 2 o'clock this morning, and here it is 7:15 or so, we're coming back to that EMA, and we're going to come back and test this breakout, likely no matter what we're going to do from there. So I like that trade. The lower high I'm not as crazy about because we're still above the EMA, and then even the reversal is still above the EMA. So that's not a good sign for going short. You might have looked at this as a failure, and it would have probably worked, but I wouldn't even trade that as a failure. You're just too much sideways, and look how the EMA is turning over. I'd sit tight here and see what happens. And we got this failed break lower. I didn't mark this trade, but I like it if you have enough room to get out. You got a higher low here, but we've already had a break of that trend line. It really didn't confirm it. You can see the trend line still stays in play up through here. But I was a little leery of entering in this. If this would have broke lower and turned up and been an engulfing bar, I'd have said go long right there. But if you go long right here, you really just don't quite have enough room. It still would have worked. The higher low is really close. I'm not sure if there's enough room or not in there. If you took that trade, I would be okay with it. It's a little aggressive still because it's just so congestive. But you do have a lot of support. You got this support, and we've tested it. We made that low. We tested it once, twice. We did break lower here though, and then we tested a third time. If I'd have seen a triple test there without it breaking lower and you had enough room, I'd probably mark that blue. But the way it is, I'm not crazy about it. Wait and see if we push on through and get a reversal pattern, which we do. And even here, normally I would tell you it needs to come back to the EMA. But the fact that it comes back and tests the breakout area and holds, and it actually turns back up and goes higher, I like going long. If that bar closes bullish, go long one tick above it, because we're probably going to break higher. And so, again, this is a failed second entry short on a pullback. It's basically a breakout pullback long, which those trades are not. They're probably our least reliable setup. But in this case, based on all the things I just explained to you, I like that trade. And you can mark that one blue. But if it wasn't pulling back and testing that resistance that acted as support, I'd say it needed to come back to the trend line at a minimum, and hopefully the EMA. That's what most reversals you'll want them to look like. But notice how it takes on off. All these people that were getting short here had to jump out. You actually got a two-legged pullback here. It's not a true second entry because we made a new swing high, but that's still 2 legs back. If you'd had a good signal bar here, but notice the signal bar is this bar and it's too bearish, I'd say go long there, but you can't go long above this bar way up here. It still works, but you don't want to do that. It's not a good setup. Then we pull back, you get a first entry, you get a second entry, but that's an inside bar and that's congestion. But when you try to drop lower a third time, notice we made the low, try to go lower once, twice. Notice how it closes inside that EMA. I like going long there. That's 3 times to go short in an uptrend. We're probably going higher. It's a little congestive. We don't quite have a measured leg yet though, but that doesn't mean we're definitely going there. It's just something to think about. But I made this one green just because it's congestive. And you just want to be sure you got enough room to get out. It's kind of questionable, but with that triple, trying to go lower 3 times and bouncing off the EMA and the trend line, we're probably going higher, but you need to know that. And of course, you make a higher low here, but you can't go low right in the highs. And this is why, because this is what will happen to you. And then you get a break. And there's a higher low here too. And again, it looks really congestive. And it's just hard to know if we're, if this is going to be a range day, which it could be, because if you draw your trend, your range across this, suddenly you see your midlines right across here and everything's fitting real nicely. So that's when you start to say, hey, this may be a range. And you don't want to be going long up here at the top of a range. So just sit tight. I don't see any trades in there at all I like. There's no short, nothing. But suddenly we shoot straight through the EMA, no support at all. That means something's changed. Something's going on here. We actually break below the support line here. We hold there a minute. We drop on down. And then we turn higher again. There's your 2 legs down, a failed second entry long. And you can see it be right off the possible trend line right there. If you draw that trend, draw it off this side and pull it up, it's setting up right there. But the big thing is this is a failed second entry long. It didn't get back to the EMA, which you want to see, and it does look a little congestive as well, but it's probably going to act as a trap, and if we turn down, there's a good chance we're going to drop lower, and it does. So you got a failure there, and it takes on off down. And actually, you make a new swing high here because this makes a lower low and a higher high all in one bar. So really you could count that as a new high, and then you get a first entry and a second entry here, and that's the first break of that little channel. And this actually breaks higher and turns down instantly. Just go short right below that if you're trading it as a failure. And this was the trade of the morning, really. If you catch this one, easy runner, everything. And you come back here, but this is a spike and channel up, and you don't get any. You get a break and then a new high and then a lower high, and that's a second entry short right there as well. It's a little bit congestive. It's close to the EMA, but you still got a lot of room. But I would look for this to possibly run lower here, because the fact that we didn't get back up to even test that high. So this is a little aggressive, but so I marked it green. It really confirms, if you draw that trend line there, this really comes back and confirms it. That's the main reason. The fact that it's a second entry short counting off the lows, it confirms that trend line. There's still a little bit of room back to the EMA, which you're probably going to come back to. There's a few reasons to like that one. It's just a little bit aggressive. It looks a little congestive. It's not as far away from the EMA as I'd like to be trying to take a short in that case. You get a failure here, and you might take that. It breaks higher and turns down, but it doesn't leave you much room to these lows. So, but that channel's still in play. You didn't quite get back to the EMA. That's another one you could argue for it to be green, but I'd probably wait on something better than that. But we'll mark it because we may get a measured leg down here if we push on through here. So far, there's no reason to think we're going lower yet at this point. You're just looking for prices to test that low again. That's the way prices will do. They'll test these important lows a few times sometimes. And notice how many times we tested it here before, but we never went higher. There's no rejection of prices here. And so eventually we go lower, and that's a good sign. Notice what happens here. We come down and touch this, and prices turn instantly, and that's rejection of prices off this low here. Here you don't get any rejection. You just keep hanging around. It bounces a few times, but it never takes off. So you got to be real careful getting long here. I marked this short just because you're in this range, and you get a first entry, second entry long. That's a very small bar. It's a failed second entry long. Generally, you don't care about those in a tight range like this. But if you see one with a setup where we normally enter, and there's two reasons to like this. It's the high of this, what looks like congestion or a range, plus it's another turn down off that trend line. And it's a really low risk bar. It's 4 ticks. And it's a second. Well, actually, it's not a second entry short here because your second entry was right here. Again, you're not really looking for second entries or failures, but if you see, really what you're looking on to do on a range is to go short off the highs and long down here off the lows if you get a good setup. And the bias is down here, so we're really looking for shorts. And so there's a lot of reasons to like that one, all the reasons I just talked about. And then notice we drop down here. Notice there's no rejection again. We're just bumping along. That means we're probably going lower. And there's actually, if you look, there's a first entry and second entry, and there's also a second entry short. The second entry short, the signal bar is not very good, but the fact that it's a failed second entry long means you don't have to worry about the signal bar, but you got to go short right into that, and we hadn't pushed through it yet. So even though there's no rejection, you don't want to go long. There's not really any reason to go short there. It drops and takes off, but you don't know that's going to happen. Just be patient. And then notice there's two legs back to the EMA here and confirms that trend line. So, and it actually goes higher and turns down, all in an engulfing bar. Yeah, that's not a true second entry, but it's still two legs back to the EMA. By the count, it's only a first entry because we made a swing low. It's lower than that one, but that's still a two-legged correction back to the EMA. There's still two legs back after two legs down. So we're probably going lower here. And at this point, we're looking for a couple of measured moves. We could get the measured move of the range that's here, and we could get the measured move of the leg down, which was here, and we started back down here. So you're probably going to reach maybe both of them, but they're both going to be possible targets. So we drop on down, come up, we get a first entry, then you turn up and you get a second entry short right there. Another small bar, 4 ticks right there. It's the first break of this. Normally, if it was just this two-tiered range, I would tell you, hey, you might want to wait on this one. But this is congestion here. It's going to be a little failed breakout. We just crossed over the midline of this. We're probably going to pull back and test it again. There's a bunch of reasons that you figure you might get a scalp out of this. The main is just a second entry short, and notice that trend working up. You get a close outside, and you swing to a high, very small, low risk bar. I like going short there. And you're not necessarily expecting prices to take off to the downside. They could, because we may get a retest of the lows here on this channel, but you're expecting to you're just looking for a scalp here. And you actually get two legs down, and then you make your next leg up, and then it turns down. There's no way to really, no real setups here. Then you come back and you get a first entry, and then there's second entry short when it breaks lower there, and we're still respecting that trend line. Go short right there. We drop on down, and then you get a failed second entry long here. So if it breaks below, when it breaks lower here, that's going to be a failure, and that's probably going to trap people. And there it goes. And I'd pay attention to this little range here too. So you don't want to be getting short down here. Even though the trend is down, don't get short down in here. That's still showing support. There's no rejection going long. The main play is still the green channel coming down. And these are secondary patterns within it. We drop on down. Unfortunately, you don't get a chance to ride it out, get into that one. And then we bounce. There is a failed second entry short here that looks like a good reversal pattern, but there's not enough room back to the trend line here, and you're already back to the support resistance line here that was support. So we could turn down there. So there's no short or long here really. And that takes us into 2 o'clock. I mean, if you knew it was going to push through that trend line and get back in the range, you could take that trade, but you don't know that. There's not enough evidence to be able to figure that out. It's actually finding resistance there and support at the EMA, so you're kind of in between there. Sure, it pushes on up, but you don't know it's going to do that. There's no evidence of that. So, and that takes us into 2 o'clock. So, pretty good downtrend, and there was some pretty good trading this afternoon. It was really slow this morning. Just one of those days. Just be careful with this. You're better off to stay out of that. Um, here, even right in here, stay out of that until you really kind of got this trend line approved. And I mean, we talked about these trades; they're a little different. But up here, we're finding resistance, but there's no reason to want to go short yet until you get a reversal pattern. So you're just kind of stuck here. Just don't enter in here because it's hard to know what's going to happen. Are we going to go higher? Or are we going to turn down? But if you notice, we get a break and there's really a couple legs up to a new high here. We don't quite get a new high on the two legs, and it makes one more push up, makes a new high, and then sells off. So that's perfect price action, really. But you really want to get a good setup before you go short. You can't be guessing at it, and you'd be guessing if you went short right in there. So anyway, that's what I saw today. I'll back out a little more here again, let you see the big picture. But anyway, I'm not going to beat around the bush. That's 20 minutes worth. It's Monday, and I still need to get through some emails and stuff like that. So I'm going to wrap it up. We'll be back again to do it tomorrow. Again, I'm probably going to take off. I hadn't decided. I'm going to work tomorrow and probably Wednesday. And I may end up working this whole week, but I'm thinking after Wednesday, I'm probably going to take off. I know I'm taking off starting all next week, but I'm not sure how much of this week I'm going to work. But I'll take the last 2 weeks off basically. So it just depends on whether I want to play this week out or I take off early this week. We'll just have to see. But I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.